$321.5 million. That is every dollar of goodwill MGP Ingredients carried at the end of 2023. And all of it is now gone. 3 write-downs in 3 straight years. The last one, $115.7 million, took the balance to exactly 0 this year. Here is the trail. Goodwill stood at $321.5 million at the end of 2023. 2024 took $73.8 million. 2025 took $132.1. Then the first quarter of 2026 took the last $115.7, and the line went to 0. Now the trap in this filing, and it is a real one, that $122.8 million net loss is the 6-month figure, and almost all of it is the first quarter. The June quarter on its own was profitable. Net income of $12.0 million on sales of $124.4 million. Strip the impairment out, and the June quarter reads soft, not disastrous. Sales fell 14.5% to $124.4 million, and gross profit fell 20.4%. But advertising came down 18%, and SG&A came down 13%. So operating margin actually rose to 14.2% from 14.0%. And this is where the obvious story breaks. All of the goodwill and all of the brand intangibles sat in one segment, branded spirits. That segment sales fell 1.5% in the quarter, and its operating income rose 74%. The segment that actually collapsed was Distilling Solutions, down 41.6%, and it never carried a single dollar of goodwill. Inside Distilling Solutions, brown goods, which is bulk bourbon and rye, fell 59% to $14.3 million. But look at how it fell. Volume was down 68%, while net price per unit was up 9%. MGP is not dumping whiskey cheap. It is selling far fewer barrels at better prices and warehousing the rest. Meanwhile, the barrel line never blinked. Barreled whiskey inventory went from $199.0 million at the end of 2022 to $283.1 million at the end of 2024 to $325.6 million at June 30th this year. Up in every single period, straight through all 3 write-downs. So is that distress or a plan? The filing answers it. Among its principal uses of cash, the company lists, quote, the aging of barreled distillate primarily to support our branded spirits segment. That is deliberate. And it is not cost inflation, because distilling gross margin improved to 38.7% on what the filing calls reduced distillation costs. Costs are falling. The build is barrels. But the bet is being financed. First half operating cash flow was negative $40.7 million, against positive $56.4 million a year earlier. Free cash flow was negative $51.0 million. And total debt went from $260.1 million at year-end to $376.9 million. On valuation, the stock closed at $18.71 on July 28th, about $401 million of market value, against $351.8 million of net debt. The barrels alone carry at 81% of the market cap. Scenarios on normalized EBITDA give roughly $3 in a bear case, $19 in a base case, and $45 in a bull case. Today's price is the base case almost exactly. Implied value under stated assumptions, not a price target. One risk has a date on it. MGP has $201.25 million of 1.88% convertible notes, and the filing says it expects some holders to require repurchase in the fourth quarter. The revolver can cover it, but that revolver has already gone from $42 million to $162 million this year, and it costs 4.99%. And on July 26th, one of MGP's significant customers filed for Chapter 11. So the honest version is not the one you would guess. The Goodwill died in branded spirits, the segment that is holding up. The revenue died in distilling solutions, which never carried goodwill. The whiskey piling up in the warehouse is a decision, not a symptom. And nobody wrote this by hand. Every number came straight out of the company's own XBRL tags. And the same pipeline reads any of the 10,000 filers at the SEC. A private company reporting in the same format is the same job. This entire analysis was built on the RoboSystems SEC shared repository, structured filing data for every public company that files. Revenue, earnings, balance sheet, cash flow, segment breakdowns, all queryable, all from the original XBRL. If you want to run your own deep dives like this one, the link is in the description.